So in the previous video, we ended on looking at the accounting standards, and I made mention of the three things that you need to note: the recognition criteria, the measurement basis, and then the disclosure requirements. It is very important for you to understand these three things when you come to the accounting standards, because the reason why a lot of students struggle in the preparation of the single entity financial statement, the income statement and other comprehensive income, the statement of changes in equity, the statement of financial position, and then the cash flow statement, is their inability to prepare or to do the workings in the footnotes of the question. And the reason why you cannot do the footnotes, the workings, goes back to the fact that you lack the accounting standards, you lack the understanding of double entry, you lack the understanding of the treatment of transactions in the books of a company. So what you have to understand is that you need to make sure that you understand these accounting standards. And so that is what I've taken my time to do. You can look at, you can go on YouTube, search for Insurer Premium. I have lecture videos on the accounting standards. You can also find me on SoundCloud, also Insurer Premium, where you can get audio lectures, or you can go to my website where I have some free courses on the accounting standards. Or if you want to have the best or the full access to the way I treat all the accounting standards in stages, then you can enroll in my online course on financial reporting or corporate reporting, where I take all the accounting standards one after the other, break them down, solve questions, give you tasks that you are supposed to do, so that it will help you to be able to understand the subject properly. Now, why am I spending much time on this section? Because it's important, it's fundamental. You're going to be having 20-mark question on accounting standard. 20 marks. In addition to that, the footnote to the single entity, as I mentioned, the footnote to consolidation, as I mentioned, is all going to be based on accounting standards. So you got to make sure that before you enter the exam hall, you understand these accounting standards. You have to make sure that before you get to the exam hall, you understand this accounting standard. Now, so after you look at conceptual framework, which is a theory reading area, regulatory framework, you can get my audio on SoundCloud, download it, and then listen to it. After you go through the accounting standards, then we now come to putting the accounting standards together. So we learn all the accounting standards, look at how the various treatments will be done. When a company is using an asset for business purposes, it is going to depreciate the asset under IAS 16. But when the company is holding an asset and is leasing the asset or renting the asset, or just holding the asset like land for capital appreciation purposes, then it's going to treat it according to investment property. If it is about a brand or a trademark, then we are going to be treating it under IAS 38. When it comes to that, we need to determine whether we are having a definite useful life or an indefinite useful life, because that will determine the subsequent measurement of the intangible assets. When we are able to go through all of these standards piece by piece, one after the other, then we're going to put all that together into the third section, which is the single entity financial statement. So this is where the examiner is going to require you in level 2 corporate reporting, financial reporting, where you are going to be preparing the income statement and other comprehensive income, the statement of financial position, the statement of changes in equity in between, then that's certainly you're going to prepare the cash flow statement. Now, when it comes to these, the examiner interchanges, so you're not going to be having all in one examination sitting. Some examination sitting you'll be getting cash flow statement, other examination sittings you'll be getting the income statement and other comprehensive income, as well as the balance sheet. So the single entity financial statement is an area where you don't have to struggle there. Why do I say that? Because once you get a section 2 right, once you understand how to treat all transactions based on the accounting standards, then it's going to be easy here, because here also the examiner is going to set a 20-mark question on the preparation of financial statements. 20-mark questions on the preparation of financial statements. So this is a very important area that you go through. But the way you will go through this snugly, you go through this easily or smoothly, is when you understand the accounting standards. So that is the third session, preparation of financial statements. Now, after we look at a single entity financial statement, we come to the section 4, which has to do with the group financial statement. Now, in financial reporting, we are looking at a simple group structure where a company has a control of another company and then maybe has a share in another company. So we're going to have subsidiary or a joint venture or an associate. So in corporate financial reporting, it's going to be a simple group structure. But in corporate reporting, it's not going to be a simple group structure. It's going to be a complex group structure where we have a parent company with a subsidiary with another subsidiary, right? Or we have a parent company with a subsidiary who also has another subsidiary. Or we have a parent company with a subsidiary and the subsidiary also has another subsidiary, and then the parent company has also invested in the subsidiary. So that is going to be a complex group structure. But when it comes to consolidation also, there are fundamental principles, concepts, treatments that you need to understand, like for instance, determination of the group structure, calculation of the goodwill, calculation of the non-controlling interest, dealing with the issue in relation to share exchange, future payments, calculating the group retained earning, looking at the movement in the net assets of the subsidiary, then from the date of acquisition to the the year end that we are preparing the financial statement, and then looking at all these. Now this one also, I have a video on that on YouTube. So when you go to YouTube, you search for Insurance Premium, I have the video on that single entity, simple group structure or consolidated financial statement, where I teach all these principles, all these concepts in the video. Now you're going to make sure you watch that video because it's going to enlighten you and show you the fundamental twists and turns that are involved in group financial statement. And here also it's going to be a 20-mark question that the examiner is going to set up on you. So 20 here, 20 here, 20 here. We have 60 plus 10 here, making 70. Now, so you realize that so far we worked for 70 marks. But the area that it's going to premise, or the area that is going to help us to be able to accrue much of this 70 mark is the section 2, the accounting standards. So if you're able to go through the accounting standards properly, you understand the accounting standards very well, then single entity financial statement, you can do that very easily. Then you can do consolidation easily. Why? Because all of the footnotes are actually accounting standards indirectly. So if the examiner says that the company valued, or the parent company valued the net assets of the subsidiary, and all the assets were at their fair value with the exception of a building which has a fair value in excess of $20 million. The remaining useful life of the asset is 5 years. That means you need to calculate what? An additional depreciation. That is under IAS 16 that the examiner is talking to you about. So anything about that, you need to understand that it's about the accounting standard. So you spend much time on the accounting standard. You do that in detail. You do that and make sure you understand it very well. You come to the single entity concept. Look at how you can prepare the single entity. Remember the pro forma of the income statement and other comprehensive income. Remember how you treat, or you do with the statement of you deal with the statement of changes in equity, and then the statement of financial position. Now the reason why that place will not be a problem is that whilst you are dealing with the accounting standards, the treatment of the various items in the various financial statement will be done alongside. This is how I teach the accounting standard. So we will be doing it alongside. So before you actually get to the preparation of the financial statement, when you see something, you know where it has to be. You know how it has to be treated. You know the heading that it has to be under. You know that you need to subtract it or you need to add it. So that is what you need to understand when it comes to the accounting standard. So 4 things so far: 10 marks, 20 marks, 20 marks, 20 marks, making 70 marks. In the next video, we will look at the last 2 things, and then we will discuss some other things that you need to understand about financial reporting and corporate reporting. So I'll see you in the next video.